Welcome to another video. Today I will show you how you're supposed to backtest a multi-timeframe analysis strategy. So the video has a lot of value in it, so make sure you watch it until the end. If you're new to the channel, I would like to introduce myself. I'm a top author on the TRADINGVIEW platform, as well as running an educational company and swing trading full-time. Without further ado, let's get straight in the video and provide some free value to all of you so that you can learn how to backtest a trading strategy. That is a very crucial thing to know how to do if you want to trade consistently and if you want to develop a strategy. Okay, so let's see how you're supposed to approach a multi-time frame analysis strategy from a backtesting perspective. So how you're supposed to backtest it. And backtesting is extremely important if you want to understand how your strategy actually performs. So you can basically test it on past market data and see how your strategy actually performs. Is it profitable? Is it not profitable? What is the win rate? How good the strategy is? How consistent it is? So does your returns on applying this strategy looks like something like this? Or do they just look like something extremely crazy? So you basically get a long string, basically long streaks of winning trades and then long streaks of losing trades. So an ideal strategy looks like something like this. So you get a winning streak, a losing streak, a winning streak, a losing streak. So something very consistent because you have a good risk to reward. So even if you win 3 trades and then you lose 3 trades, then again you win 3 trades, then again you lose 3 trades and you win 3 trades, just you get the idea. You will always continue growing your account because when you win, you're making 3 times what you lose when you lose. Because basically, for example, if you have a minimum of a 1 to 3 risk to reward on your strategy, every time you win, you make it 3 times what you're losing. So even if you win only 3 trades out of 10, you are still in profit. And this is a very important thing that you need to understand when it comes to trading. By the way, if you remember in the last video I made about USD CAD, I told you guys to expect a push to the upside from this area. And as you can see, basically the market has today made the push to the upside that we expected, and this was very predictable. The market had created a perfect formation at previous support here on the weekly time frame. If you want to go and check out the video, I will link it in description. But let's get straight in why actually how to actually backtest a strategy. So the first step is you want to check the weekly time frame if you have a multi-time frame analysis strategy. It's pretty simple. So what you will do, the first step, take a vertical line. Okay, it's very important to take a vertical line. Then put it on any candle in the market. And this is very important. I will now show you exactly why. First, you take a vertical line, put it on one candle, and then you put another vertical line on the next candle, and again, another vertical line on the next candle. Now, what this will do will basically give you the start and the end of the weeks in the market. So now when you will go down on lower time frames, what you will get the start and the end of the weeks. Now let's answer the question, why did I actually put it on these 3 candles here? Why do I want to backtest this price action? So I want to backtest this price action because it's pretty clear that this is a very interesting situation in the market, because you have an impulse, a correction, another impulse, another correction, and you expect the market to continue the push to the downside after the market has created basically this red candle here. So on the weekly time frame, the first step is the weekly time frame satisfying the rules of my strategy? Now, in my particular case, since we're speaking about my strategy, yes, the market after this weekly candle, this red one here, was satisfying the rules of my strategy. And in fact, we were monitoring for this short with the students. And I will now show you why. But the first step when you want to backtest a strategy is to check on the weekly time frame, is the market satisfying the rules of my strategy? And if it is, then you put this vertical lines, because in this way you will get the starts and the ends of the weeks. So let's go down on the daily and see if also on the daily the rules of your strategy are satisfied. Now here on the daily time frame, you can already start to understand why we put these vertical lines, because basically by doing this we have the start and the end of the weeks. Now, in our particular case, at this point, you can bring down your reply tool. And at this point, you can basically start to not watching what the market does. So basically simulating a real market condition. So in this case, what do we have? Which are the rules of my strategy? Now, in my case, we have an affirmation. So after an affirmation, I'm expecting a retracement. But I know from a weekly perspective that I'm expecting continuation to the downside. Why am I expecting continuation to the downside? Let's go back to the weekly. It's pretty clear that if you look at the market, we have up, and then again down. So what you're expecting is the market to make a minor push, because on the daily, you clearly have an affirmation, and so you're expecting a retracement. And here on the weekly, if you go to a line chart, and by going to a line chart, what you basically get, you get the closes in the market. You can clearly see that you have a nice, strong close at this area, meaning that basically the market has a very high probability to go and retest that close. Now, what happens if we go back on the daily time frame? On the daily, as we have already seen, we have this nice and clear information. And what you can do, you can take your Fibonacci. What you must do, in my case, for my strategy, when I have this situation, I have to take, according to the rules of my strategy, a Fibonacci from the high to the low. And I want to see the market go and retrace at least to the 382 Fibonacci, which in this case is aligning perfectly with the 382, so the 382 Fibonacci is lining up perfectly with the close that I had found on the weekly, which we identified with this horizontal ray. So we have a very strong confluence area exactly at this price here. So as you can see, you're using the reply tool and simulating a real-time market analysis. Now, what do you do next? As you know, the time frames monthly, weekly, and daily are for direction. The 4 hours is for entry. So at this point, once I know that from higher time frames, what I'm expecting from the market is the market to go and retest this zone and then continue to the downside, my job is to see how, and if my strategy was actually giving me the possibility to take a trade from this area, and if all the rules were satisfied. And this way, I can basically record my trades, and I can keep doing this process over and over again on all past data and see how my strategy actually performs. So in this particular case, on the 4 hours, we still didn't have a retracement to our zone. So I'm still waiting for the market to hit my 382. So as you can see, the market has now hit the 382. Now there are more conditions that my strategy needs to satisfy in order for me to take an entry. But I know that depends on your strategy, okay? It's something personal that depends on the way in which your strategy works. I can't tell you my strategy because it's part of the mentorship program. So I'm just giving you some clues that you can incorporate in your own strategy when you're developing it if you don't want to join the program. But obviously that is where you get all the rules, but I'm trying to help as much as possible. So here, in my case, I'm expecting to push to a 32 plus other conditions that need to be satisfied. But in this case, they are satisfied because I already checked. Basically, I already know that this trade, we actually took it in live market conditions with the students. So I know that also the other conditions are satisfied. So I don't need to check them in this particular case. But if it wasn't a video with you guys, I would have had to check also for other things. But let's keep it as simple as possible. The market has retraced to my zone. What I'm expecting next. In my case, I'm waiting for some structure to develop because I can't take a trade without structure. And now is the exact moment in which I have the structure to take the trade because the market went up, and down. In this case, the market created an information on the 4 hour time frame. And what I'm expecting is a retest of the neckline before continuation to the downside, overall to the minus 27. So basically, I'm expecting continuation to the downside from this area. And now I have a structure. So basically, also in this case, I need to check for other conditions, but I already know that in my case, they were satisfied because we actually took this trade. So when it was basically in October, we actually took this trade. So in my strategy, basically what we do, we enter from the structure if also the other conditions are satisfied with a sell limit. And that is also another important and a strong part of my strategy, that basically we can set limit orders and we don't need to monitor the market. We only need to monitor the market every 4 hours because basically what we wait for are these candles to close. So every 4 hours, you just need to check if the market has created structure. So you only need to check on your phone every 4 hours if the market has actually satisfied all the rules for entry. And at this point, you check your phone and the market has satisfied all the rules for entry. And you can put your sell limit at structure with a stop loss above, obviously, structure and at least a 1 to 3 risk to reward. And as you can see, the market went for a perfect retest of the structure. Actually, the next candle makes some slippage to the upside. I can still remember this. As you can see, a minor manipulation to the upside, and then basically the real push to the downside started. But overall, this is how you're supposed to backtest a trading strategy. So basically, every time what you do, you focus on is what kind of rules is your strategy satisfying on the different time frames. So is my strategy satisfying the rules on the weekly time frame? If yes, then you put horizontal rays on that weekly candles. Then what happens? You go down on the daily. And on the daily, you already have the start and the end of the week. So basically, I already know that my strategies satisfied the rules for entry on Tuesday. Okay, you already know it. I mean, you already know that it was around Tuesday when the market actually satisfied the rules for entry. And as you can see, obviously, the market hit the target. But the next step, as I was saying, you go on the 4-hour time frame and you see when should have taken the trade. At that point, once you know how and when you were supposed to take the trade and how the trade actually played out. So if the market actually respected the strategy and there was a win, or if it was a loss. So if it was a loss, you record on your spreadsheet this trade in this date with a screenshot for your eyes, basically, so you get used to your strategy. It was a loss, so -1 R, or if it was a win, you record plus 3.7 R. And you just keep going over and over the same process again and again and again. And one very important thing that I want to tell to you, you need at least 100 backtested trades, okay, to say, okay, this strategy is definitely profitable. It's very important that you backtest at least 100 trades, because at that point you have enough data to say, okay, this strategy is profitable and this is what I will just keep applying over and over again, because I know that if I follow all the rules of the strategy, my returns will just keep increasing and increasing and increasing. I know this is very difficult to do all this work to actually develop a strategy, but it's the big difference between those that want it and those that don't want it, those that really want to become traders and those that don't. Now there is the easy way and the hard way. The hard way, you develop everything on your own. The easy way is that you learn from somebody that already has done it and already has a strategy. So, but that really much depends from you. Like I developed my own strategies. Okay, I got strategies from my mentor, but then I adjusted them to myself. And I can promise you that it's a lot of work, but it can be done. So I don't want to say, okay, the only way to actually have a strategy is to join the mentorship program. It's not true. Okay, you can do it on your own, but it will be very, very, very hard. If you enjoyed the video, make sure you smash the like button. It really does support the creation of more free education for all of you, as well as letting me know in the comment section below if you enjoyed the video and if you think I can do something better to provide some more free value and education to all of you. If you still didn't check out the mentorship program, I really suggest you go check it out. You will learn all of my strategies and you will be able to trade them live with me every day. I send you a new daily market breakdown after you have learned the rules of our rule-based strategies, and you will be able to trade them live together with me. That every day I send you a new daily market breakdown showing you which pairs are near to satisfying all the rules for entry, as well as answering all of your questions in video format each and every day within 24 hours from when you ask them. I will see you all in the next video.